Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, April the 20th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live pre-market sessions to put our trade plan together. We take a look at the market macro to micro, drill down to the trade levels we're looking at, the targets we're looking at, and the hypothesis for the day. Before we get started, this is a subscription room. If you want to come in and check us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you are interested in checking us out, there's no website, there's no blog. Everything we do is live here in this go-to. It's not a commercial venture. Send me an email at quantumleapfutures@gmail.com or send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario. There's over a year and a half of these pre-market sessions on YouTube. If you want to watch them, check us out on what we've done in the past. Just do a search for Quantum Leap Futures. And if you like what I do, please follow me on Twitter at Crazy2. Okay, yesterday our main hypothesis was we were going to open up out of range and out of value. So we were looking for a chop on the open, an open auction out of range, and then a move down into the 86 down to the 80, I think it was 81.50. What was the value area low? Value area low was 81.25. And then we were looking for responsive buyers to step in and then move back out of range and up into testing that overnight high at 98.50. They kind of did it part of Hypo 2 as well. Our Hypo 2 was a move up into the 98.50, possibly test 2100 and fail, and rotate all the way back down through into the 86 and possibly down into the 82 level. And they sort of gave us a combination of both hypotheses. We chopped around. We did have an open auction out of range. Our opening swing high, 93.75, opening swing low, 91. Then we went up and we failed to get to the overnight high, put a double top in on the developing IB, or at that point in time it was the IB, and came down and was really looking for it to bounce off the midpoint and go up and take out that 98.50. I actually took the 94.50 long and had my order sitting there at 97.75, and believe it or not, it did not get filled, and I ended up having to take the runner off just in front of my entry. It was kind of a drag. Then we rolled over and we came down, tested the range high, failed to hold, and came down, took out the VPOC, naked VPOC. At this point in time, now we're looking for a move down to the overnight low to take it out, and it came up to the range high, failed to break out. At this point in time, you're looking for them to come down and take out that 84.75. What do? They miss it by a tick, and then rotate all the way back up and start chopping around and putting a whole bunch of volume through in at this 93. So a very high probability, 97% probability, did not get filled yesterday in terms of the overnight stat. So kind of an interesting scenario. All in all, it's been a tough environment for trading, definitely, last week and a half. Now, what I like to do every day is start out with a basic candlestick chart. I use a 9 EMA and a 20 SMA on all my charts, and I'm just trying to get a gauge of where we are in the trends of the different time frame. And you can see that I start with the monthly and work my way down into the intraday. Monthly, we had this beautiful long-term multi-year trend, and then in August and September, they violated that trend. October and November, they took it back. December saw us testing the 9 and the 20 again, and then January and February we fell and we violated the trend again. But now in March and April, they've taken it back, and we're looking at a possible continuation and a test into the 2100. Remember, 2100 is the all-time adjusted RTH high based on the current contract. 2134 is the unadjusted all-time high. And you know I like to see equalization of the all-time highs between the contracts. So I'm still gearing for this 2134, but our immediate target to the upside right now is this 2100. Going to the weekly, you can see we've had this nice parabolic move on the weekly for the last, I don't know, 10, 11 weeks. There is a naked cross down here at 1983. That's going to be important when we fail. That's going to be our first major target below once we fail this upward trend that we've got on the weekly. But the trend itself is still very strong to the upside on the weekly. Same thing on the daily. We had good slope and separation. They come back, challenge the trend, take it back, give us our continuation pattern, and we've got good slope and separation to the upside on the daily. Going to the intraday, you can see that pretty much all the intraday is on an upward trend. You can see it gets good slope and separation. There's another naked cross here at 73.50 area. Going to the 1 hour, we kind of rolled over, but now we're back in this upward trend, and we're getting slope and separation. Another naked cross down here at 90. So we are starting where this whole move up came on very small amounts of naked crosses. We're now starting to leave a trail behind us, which are going to be our targets on the retracements. Going to the 30-minute, you can see, good trend. You're getting a technical gap here on the 30-minute. A gap close will likely bring us down into that 93. 93 is going to be an important level for us today because of all the volume that went off there yesterday afternoon and the fact that it's our VPOC from yesterday. So we do have an upward trend, but we are creating a bit of a technical gap on the 30-minute. On the 15-minute, we're coming back, already starting to come back and backfill this technical gap that was created on this nice spike up. I think this spike up was caused by ECB Draghi speaking this morning at 6 o'clock. But the trend itself is still in the upside. Going to the 5-minute, you can see that strong trend, technical gap. It's now closed the technical gap, and we're getting consolidation and the first sign of a possible change in the trend, although this can change very quickly. We're right at the 2100. So taking a look at the big picture, I know this is going to look a little bit crowded. At the last quarter of the year, we were in this balance area right here, which was the microcomposite that went through from October the 7th through to the end of the year, where we fell out of the balance. The value area high was 8650. The value area low was 2008. We had this upward distribution, Gaussian distribution there, and then our microcomposite VPOC, it was 6350, and the key microcomposite LVN is down here at 16. And once we got above 16, we were looking for the move up into that 6350, and the composite VPOC, which is the most traded price going back to the beginning of 2013 at 6150. We did that. We came back down into this 40, created value at 40, accepted value higher at the 48 area, and then we gapped up and we broke above that 69.75, 69.50, tried to hold there, created value at 75.50, and now we've gapped up again and coming up into testing the 2100. Our high so far is 97.75, 98, sorry, 98.50 in the overnight session so far. So the key right now is we're above the 2086.50. We've gapped up again. We have an a CLVN here at 85.75, and we're going to open up near the highs of yesterday. Key level to hold today is going to be this 85.75. If we don't hold 85.75, I'll be looking for a bigger move back down into this 75.50 area. There is a small LVN here at 80. Microcomposite VPOC at 80.50. So we've got 86.50, 80.50. I would really discount the 86.50 and go with the 85.75. It's a little bit stronger. In fact, use it as a slush area. You don't want to be long until you're above 86.50. Don't want to be short before you're below the 85.75. Now there is a template day that I put into the room. I put the wrong date. This is actually the 20th, 7/20. And you can see we opened up in that 95, 96 area, right where we're currently trading. And then we came back down into the prior day, tested the value area, got down to 90.25, and then they rotated it back up and went and tested the 2100 for the first time, and then failed from there and came back down to near the open and chopped around. So use this as a guide today. Taking a look at the overnight action. Our overnight high so far is 98. One tick above yesterday's high. Our overnight low is 2 ticks or 3 ticks above yesterday's RTH low. Our current VPOC, which is not likely to change, is down at 2088. And we have an LVN here overnight at 2092.50, which is basically right at the VWAP, the open. Remember, yesterday's open was 2093 and the VPOC. So I don't usually put a trade level at the VPOC, but I'm going to put it right just below it at the 92.75, 92.50 area, because if we don't bounce off of the VPOC, then we're likely to come into this lower distribution down here and repair what is basically a P-shape profile. So failure to hold the VPOC is likely going to bring us down to our first target down here at 91. And if we don't hold the value area, then I'm looking for a bigger move down to the 88 and the possibility of coming down and taking out the overnight low at 85.75, especially if they leave that overnight high alone and we fail. We're currently trading right at the value area high from yesterday. That is going to be a trade area for me. I'm actually using the 95.75. and just incorporate that 96.50, and I want to be long above 96.50 into the break of the range high at 97.75 and the overnight high at 98, and a move into testing the 2100. Of course, above our first target above is 2102.50. Our daily 20-day ATR is running 2171, so off the low of the night at 85.75. Our upside ATR target for the day is 2107.50. I'm actually looking for the possibility of getting the rule of 10, move back into above a centennial number, usually pushes through by 10 points. and looking for that. Targets, if we do get a trend day up, the targets on the upside, there's not a lot of guidance up here, but based on previous trading in the older contracts, I can tell you that there is a level at the 2015. There's a target at the 1350. This is going back and using the unadjusted numbers, and then there's a trade level at 21. And then, of course, we've got our weekly ATR target is still up at 21.30 and a quarter. And then, of course, our unequalized all-time high at 34. And then the other target will be the 2150. Oh, it's already there. Okay. So those are our upside targets for the day. Downside targets, you've got the trade area at 95.75. Your first target below is going to be your gap fill at the close from yesterday at 93.75. Of course, I'd be expecting to come down and take out the naked VPOC and test that LVN from the overnight session. And then below that, 91, the 88, the 85.75. I don't need this anymore. Expand this out. There is that that CLVN. I'm going to use the 85 level, the range low, and then below that, there's not a lot to guide us. We've got the 80, 50. And then the big target below, the next big target below, is basically down near our daily ATR downside target, and it's the 75.50. And that's the microcomposite VPOC for the 2 days after we gapped up. And then we had a breakout day. Now we get a doji day yesterday. I'm expecting today to have two-sided trading as they fight this 2100. My main hypothesis is to come back down into the value area, test the 93, possibly the 91 area, find responsive buyers, come up and test into the 2100, poke into it, and then chop around between the range high and the value area high and the 2102. If we get up and accept the 2102, then I'd be looking for a continuation up into the 2110. But I just don't think we're going to pop right into the 2100s and they're going to let it go. There's a lot of liquidity right now sitting at this 2100, and we're likely to come up and fail. So the main hypo is, open auction just inside a range, come down, test the value area, dip into the value area, take out the naked VPOC, and then possibly bounce off of the value area low and rotate back up and test into the 2100 and chop around, not getting any large amount of extension. The secondary hypothesis is to open auction in range, hold the value area, chop at the upside of the range from yesterday, test into the 2100s, fail somewhere between 2102.50 and 2107.50, fall back out of the 2100 and come down, chop around into the range high and the value area of the prior day, then fail and come down and test this lower distribution down here in the 85 level, possibly even coming down into this 80.75. You can see that on the, if you look at that 20th day, the day after the 20th, we actually fell fairly significantly off out of the range there, and made a not a significant, but a decent retrace off of the failing at the 2100. So if we take a look at the Keltner, Renko with Keltner, we had a nice impulsive move here. The zipper is down in the 90 area, so that's why I'm looking for a possible move down into that 91 area, and then a push and a continuation wave up into the 2100. We're sitting right on the upper Keltner line right now at 97. The VWAP from overnight and the Keltner center line is at 91 1/4. A break below that takes you to test the lower Keltner, which is down there in the 85. You can see how that's all playing into our hypotheses. Gold has made a significant change in context. Remember that our composite VPOC that goes all the way back to 2008 was down here in the 1204. We've now had a VPOC shift up into the 1253.30. We're currently trading at the current microcomposite value area high at 52.20. We've got a CLVN here at 48.30. They've come down and tested it already in the Globex session. If we get below it, I'm looking for a move back to 1253.30. The fact that we've got the shift up in the composite means that we're probably not going to get away from it right away. We're going to come back and we're going to chop around in this 2053.30 area. So be careful on trying to take any breakout trades. I'd be looking for a reversion to the mean type trades right now in gold back towards this major magnet that is now shifted up some 30 points. So values being accepted higher. Don't believe the naysayers when they say gold is gonna tank. Right now, gold is going to chop around in the mid 1200s and accept this new value at 1235.50 area. So that's going to complete the pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.